Welcome back to Worldwide Exchange. The software sector taking a beating on growing worries over whether AI will chip away at the competitive moat the sector has tried to build against the advancement of generative AI tools. Private equity firms, which have invested heavily in software in recent years, also suffering in the sell-off yesterday. But let's get the perspective on that and so much more from someone who's been at the top of the investment game for many years. Joining me now is Steve Pagliuca, senior advisor to the private equity team at Bain Capital, chairman and CEO of Pags Group, a single-family office. He's at the World Governments Summit in Dubai and joins me now. Steve, it is great to have you on the show. Welcome, welcome.
Great to be here, Morgan.
So let's start right there, because there is a lot to cover. But this AI eating software narrative seems to be back in full effect in the market right now. Your thoughts?
I think there's some truth to that. But as markets go, there's probably a bit of an overreaction. You know, software as a service has been a great business for the last 20 years. But now as everything comes to be competitive, AI is going to change that, and it'll erode, certain customer renewals, and mainly you'll probably have a high retention rate, but getting extra seats is going to be hard because AI is filling in for that. You can kind of design your own programs now, so some things will go in-house where you're paying outside software for it. But I think the market's probably overreacted because some of that software is really embedded, and it'll have a high retention rate. And I'm certain some of that will come back. Valuations were very, very high in the first place, so they might have gone down anyway. So I think the market's probably overreacted a little bit.
Yeah, and of course we've seen this play out with the alternative investment managers that are publicly traded and the private markets companies that are publicly traded as well too. A lot of focus on private equity, which owns a lot of software companies too. So when we talk about valuations, not only in the public markets, how does this play out in the private markets?
Well, I think many of those private equity companies that are public actually have a big diversified portfolio. So again, that's probably an overreaction. Companies like Blackstone, Carlyle that are public are actually have good portfolios and low default rates and are doing very well. So yes, there are certain firms that have over-reliance on that, but most of those firms are diversified. So I'd really look into their underlying asset base before I bought into the fact that they should have dropped like this. They're probably, some of them have big value because they're not all in software as a service.
Yeah. Do you think it forces some reconsiderations in terms of exit strategies around some of these software companies that are held by private equity firms?
It might slow it down a little bit because obviously the valuations were very, very high because of high renewal rates and high growth rates, selling more seats. As that slows down, you'll have an issue. But I think they can make a comeback and, in fact, incorporate, like many companies done, incorporate AI into their systems and be compatible with it. If you step back, we have a massive growth opportunity going on in the USA and globally because we are building effectively the digital railway of the future, and the spending is enormous. And the spending is not speculative because that spending is existential to the companies that are doing it, like Microsoft and Google, because they will have to win the AI race. And to win that race, they have to invest enormous amounts of money in infrastructure, data centers, and we're counting that in the trillions now. So there really hasn't been a time, maybe you have to go way back to the railways, where people are spending effectively trillions of dollars over the next 3 or 4 years. And that's only the direct spending. There's going to be lots of indirect spending on energy sources, people that build the plants and build the facilities, chip companies. Tech companies I'm on the board of have seen orders double and triple because these AI providers and data centers need all these chips. Yeah. So you're seeing a massive investment that's going to buoy the economy. And that doesn't even count the fact that in a 3 to 5 year time frame, you're looking at quantum computing, which will do the same thing and maybe even enhance that cycle.
Yeah, and it certainly seems like there's the potential for quantum to come online in a more meaningful way, perhaps faster than people realize. When I hear you talk about this, we've seen and heard the comparisons to the 1990s, for example. People like to throw around the bubble word. It sounds like you don't think this is that.
I think it's very different because the bubble arose because venture capitalists and people got carried away. I remember I used to go out to Silicon Valley and I'd meet 17 companies. And they said, you need to put a term sheet in 5 minutes for a valuation of a company that had no sales of $500 million, which was crazy. And at Bain Capital, I think we did no investments in 1999 because it was so crazy. This is very different because these are large companies with hundreds of millions and billions of cash that are pouring it in there because AI is existential to their future. So that's not going to stop. That's budgeted, and then that's ratcheted to their suppliers as well. So it's very different than 1909. Obviously, there's going to be some misallocations of capital and some winners and losers. But in the end, you're going to develop a global infrastructure that is far different than what we have today. And it's going to retool business in general throughout the world and actually increase productivity, which I think is the key to success.
Let's get back now to our conversation with Steve Pagliuca. He's senior advisor to the private equity team at Bain Capital, chairman and CEO of the Pags Group family office, also the co-owner of the Italian Serie A football club Atalanta. And Steve, it's great to speak with you and to have you on the show. We just talked quite a bit about AI disruption. One thing we haven't talked about is what that means for biotech, which is an area that you are heavily focused on.
Absolutely. Biotech is going to benefit greatly by AI, and it's already doing that now, where you can do simulations and fold proteins on a digital basis, which used to take months or years, and you can do that in days now. That's going to lead to breakthroughs in cancer treatments, in health and wellness, and it's all great for all of us. I mean, I'm not getting any younger, and so I'm cheering on the sidelines for these companies to come up with things that make us live better, live longer. So I think it's a huge market opportunity. And AI, when you combine AI with, I think, the advent of quantum computing, that power is going to allow us to harness the genome, use all the studies that have been done in the past, and bring out drugs faster, quicker, and cheaper. So it's great for the world and great for society.
When do you think we realize the full potential of that technology combination when it comes to drug discovery? Are we still a few years away, or are we already starting to see it take root now?
We're starting to see it take root, especially with the protein folding and simulations. It'll take probably 3 to 10 years for it to come full force, but already they're seeing some successes and great progress in the area. We've looked at Pags Group invests in many biotech companies, and they really are now diving into those tools to make their lives easier and to have a much better understanding of how drugs interact with the body. And when you can simulate that, you don't have to do a 3-year clinical trial. You can go, right ahead, final trial. Hopefully, regulatorily, we can get that passed. And U.S. and China are having a big competition of this now to who can get there first. So I'm hopeful that there'll be a lot of great drugs coming out of that.
Yeah, at a time where, at least here in the U.S., there's a big focus on affordability and specifically how you bring health care costs down, which has obviously been a big chunk of the inflation picture for a number of years. What does this do to the drug price piece of it?
Well, this will make it easier to bring out drugs. It should lower the cost dramatically. It's costing pharmaceutical companies, anywhere from $500 million to billions to do all those trials manually and go through all the data. AI, quantum computing will shorten that cycle. So hopefully it'll bring prices down as well. And also in the U.S. it's high because of the world policy of the drug companies really charging international firms, international countries a lot less. The current administration is reversing that. So that should ease some price issues in the U.S. as the drug companies can make more profits internationally now. The U.S. used to subsidize the whole thing. Now they're not subsidizing it anymore as much. And before we get to sports, you are at the World Government Summit in Dubai. Ray Dalio making some news overnight where he warned that we could be on the brink of a capital war. But in general, when you look at, we talk about AI's disruption to the world order, I would argue right now, whether it's trade policy or foreign policy or geopolitics, what are you seeing and hearing at this conference? Well, what I'm hearing is all these countries are looking at some decoupling from global trade for key specific strategic items like chips and lithium and materials for things that the country needs. I think there was a wake-up call during COVID when the U.S. couldn't get masks. They were all produced in other countries, and we couldn't get masks for our own people. And so the whole supply chain is being restructured. And I think that's a good thing. Now, the interesting thing is, who does that benefit the most, the kind of strategic decoupling? It's China and the U.S. because they are giant markets on their own. So this is going to hurt the European countries or the EU if they don't get together as one, and they're really not one at this point in time. So the countries that will benefit on a relative basis are the U.S. and China because they already have scale markets, and they're moving down the curve of reallocating these supply chains so they'll have those strategic elements inside those countries. Once that process happens, I think we'll have a pickup in global trade again, and things will go more back to normal.
All right, I'm going to shift here now to sports because you were a co-owner of the Boston Celtics, still a stakeholder. Stepping away from that, though, I mentioned Atalanta, Serie A, Italian soccer team as well, bidding for the WNBA Sun 2, which I'd love an update on that process as well. But in terms of sports valuations, I guess how would you assess this marketplace right now and where we are in terms of valuations?
Well, sports valuations have exploded. And why is that? It's because when we bought the Celtics in 2003, you could count fans in maybe the tens of thousands or 50s of thousands. You had kind of local broadcasts and national broadcasts. The technology has changed dramatically where you now have streaming all over the world. And some of the big soccer teams are counting fans in the billions now. And that's happening with the NBA and the NBA coming to Europe, expanding to Africa. And so sports has been globalized essentially by the technology. And fans can get closer to the players because you can have content 24/7 delivered to your small cell phone device. If you step back, the most highly rated television programs right now are 9 of the top 10 are sports events because they're the only ones that can aggregate a giant audience. There's a battle between new media, the Googles of the world, the Amazons, Netflix, and old media, and they have to have those rights. So rights prices have exploded, and that's driven the valuations of clubs up. And Adam Silver's done a fantastic job at the NBA, capitalizing on that for all the NBA owners. And it's a great product. The same thing in soccer. So I'm very fortunate to have been invested in basketball and football/soccer, which are global games that have benefited the most by this trend.
Quickly, are there any sports or any teams that you have your eye on now?
You know, if I've told you that, they'd have to shoot me. But, you know, we're actively looking at teams. And, you know, teams are, the great thing about it is I love investing in general. But investing in teams is investing, but it's also a really emotional thing. We love all the guys at Atalanta playing so hard. You get totally emotionally invested in it, just like the fans. And it's become a huge part of my family and our lives. And for me, it enabled me to go back to Italy. My grandfather came from Italy in 1922. Worked in a shoe factory, made $8 an hour. So for me to be affiliated with an Italian football team with a great family like the Percassis is a dream come true. And I'll be flying there tomorrow for a huge game with Juventus, which hopefully will beat them at New Balance Stadium.
Yeah.
New Balance has come in and helped us revolutionize our marketing and our equipment, and so we're really excited about this year and working with New Balance and our New Balance Stadium's fantastic. So
yeah.
I'm excited about tomorrow.
Well, the Brennan Cacciati family will be tuning in as well. Steve Pagliuca, thank you.